And keep it on the markets and bring in our next guest, Ryan Payne from Payne Capital Management, the president there, and also Payne Points of Wealth podcast host. I haven't heard your podcast before. I have to tune in. Thank you, sir, so much for being here with us today. So I want to start off with Jay Powell, just wrapping up day 2 of testimony. But I'm wondering, how surprised were you at the market moves based on his comments yesterday, signaling that perhaps a 50 basis point hike in March is off the table, instead favoring a 25% basis point hike instead? And then also wondering, are you seeing signs of complacency in the market that perhaps the risk that is ongoing in Ukraine and Russia will be short-lived?
Yeah, well, I think first off, it just comes down to markets love certainty, right? And there's just been so much fodder around. Is it going to be a quarter point, a half a point in March? And then Jay Powell basically expressed yesterday exactly what the Fed's going to do. And it's less hawkish, right? So the less hawkish the Fed is, the more easy money's flowing. And obviously that's great for risk assets. So I think that's absolutely a positive in the short term. And in terms of complacency, I think, bottom line is, look, we know historically any conflict we've had like this, barring World War II, whether it was the annex of Crimea, part of Ukraine back in 2014, or any of these other smaller wars that we've had over the years, markets tend to react in the short term, but then they move on. We don't tend to go into a bear market. So I think, once you strip out the Ukraine, which is a terrible situation, and I spent a lot of time in Ukraine, so I have a lot of empathy for the Ukrainian people. But from a market perspective, it's a very, very small part of global GDP. And, the other issue is the U.S. economy is rocking, right? And we're not hearing a lot about that right now, but that bodes well for risk assets.
So I know you say that, markets don't tend to fall into a bear territory on these geopolitical risks, but there is quite a lot of bearish sentiment out there. Powell said he can achieve a soft landing. How confident are you of that? And then how worried are you about stagflation or a recession on the horizon?
Well, first off, I love pessimism. The more pessimistic investors are, the more bullish that is for investors. So I bring in the pessimism. I embrace it. It means it's probably a good buying opportunity. And, I do think the Fed will be behind here. And we're already seeing that. They're already backing off, right? Going with a quarter point hike in March. And they probably should be more aggressive because we know inflation right now is at insane levels. But at the end of the day, I don't think we're going to recession because the bottom line is, look, the middle class has $1 trillion more today than they did before the pandemic. We know wages are going up. And the one piece of conventional wisdom, which is just not true, is inflation probably isn't going to stay this high. If you look at the 5-year inflation number, it's more like 3%. That's a lot lower than over 7% we have today. So the bond market, which is way smarter than the equity market, is already telling you that inflationary pressure is going to go down. Meanwhile, wages should stay high. And look, we've got the pandemic turning into an endemic. We're down like 90% from peak COVID cases. So people are going to live this summer. They're going to spend money. They have more money. And that's just like awesome for the economy. And of course, that should equate to profits from companies, which is going to push the stock market even higher here.
So then let's talk about the portfolio. How do you allocate in this sort of market with soaring oil prices, taking a breather today, and commodities sky high as well?
Yeah, it's a really good point. So if you look at it right now, the only part of the market that's really getting hammered here is growth and that horrid disruptive technology trade that's just been trading, to the moon. If you look at the ARK fund, which kind of is your flagship disruptive technology fund, it's down almost 60% from peak to trough. Growth stocks are down like 13% this year, whereas value stocks are down less than 2% for the year. And you mentioned commodity prices. Commodity prices are going through the roof, obviously, because of the conflict going on between Russia and Ukraine. They're a huge exporter of grains. And of course, Russia being a huge exporter of oil. So I think this speaks to right now is it's so important to be diversified because every strategist at the beginning of the year, which usually get it wrong, no one told you that they thought that Russia was going to invade Ukraine and that was going to push commodity prices up really, really high here. So I think you want to have commodity exposure in your portfolio, value stocks over growth stocks, because with inflation kicking in, it's companies that have pricing power and that pay big dividends, and that's going to skew towards value. Whereas growth could bounce here because it had such a horrible run right now. But at the end of the day, we know growth stocks don't do as well in a higher inflationary environment. And that's what we have today.
Real quick, only about 20 seconds left. How does energy look for you? Still room to run? And then how does cash look as an asset to hold right now? I know I probably get yelled at for asking that.
Well, number one, energy still looks good as a long-term play. May have some more volatility in here, but energy stocks trade cheap, and peak energy demand still like a decade away. Talk about it on my podcast, Payne Points of Wealth, the best financial podcast. Go to bebullish.com. And cash is trash. You can't sit in cash paying 0.01% when inflation's 7%. You want to own a diversified portfolio. You don't want to be in cash here. You heard it here first.
Okay, I'm going to tell my kids that the next time they ask me for $5. Cash is trash. All right, we'll leave it there. Thank you so much for your perspective. Brian Payne, Payne Capital Management President and Payne Points of Wealth podcast host. Alexis, over to you.